Coming up on Business Incorporated. South Africa's indebted power utility is considering selling distribution assets. Kenya plans to buy electricity from the $4.5 billion Grand Ethiopian Renaissance Dam. Plus, Egypt and Russia in talks to sign MOU to promote natural gas as fuel in transport. And good morning, good afternoon, wherever in the world you're watching from is Business Incorporated live on Channels Television. Let's kick off with market numbers now. We see it's mostly green at the intraday in Africa. See Nigerian exchange traded up marginally, while South Africa's main index fell 0.74%. That's why I see Egypt's posted gains. Its index rose by 0.31%. The Nairobi exchange closed Tuesday session negative at 0.25%. And in the Middle East, all the major markets are trading in negative territory. We'll most likely close the day the same way. The Abu Dhabi index is trading at 0.29%, while Dubai financial market was trading at 0.11%. On the other hand, the Qatari index is also trading negative at midday with 0.37%, while the Saudi market trades at 0.04% negative. All right, now let's see the big story in Europe now is the German government's decision to halt the approval of Nord Stream 2 pipeline. It's one of an onslaught of sanctions being imposed by Western nations on Russia over its actions in Ukraine. Let's bring in Rob Watts now, right there in Berlin. Great to have you, Rob. So the Germany's decision to suspend Nord Stream 2 come as a surprise?
Well, this did come as a surprise, really, despite the fact that we knew that this was one of the options on the table. The German government had at times been reluctant to mention sanctions against Russia and Nord Stream 2 in the same breath, much to the frustration of its allies. But when the moment did come, Germany acted swiftly and decisively. Russia's recognizing of the two breakaway regions of Ukraine as independent clearly crossed a line for the German government. It showed that President Putin had no interest in maintaining the Minsk agreement that was seen by Germany as essential to finding a diplomatic solution to the crisis. And so Germany acted. Chancellor Olaf Scholz said Germany was withdrawing a key energy security report that was required for Nord Stream 2 to be certified, rendering the commencement of gas supplies between Russia and Germany through the pipeline, as he put it, impossible. He also made it quite clear that undoing that move would take, at the very least, a very long time, but left open the possibility that Nord Stream 2 would never enter into operation. That is a massive gesture, given the $11 billion spent on the project and the major role it played in Germany's future energy plans. But the German government and the EU Commission insist that Europe and Germany can live without that extra Russian gas.
Right, and what other measures, have European allies taken against Russia?
It's understood that top EU diplomats unanimously agreed to a range of sanctions against Russia due to be implemented over the coming days. They're set to target the 351 Russian lawmakers who backed the recognizing of Donetsk and Luhansk in Ukraine as independent. They're also going to target 27 other individuals and entities who are seen to have threatened Ukrainian territory and sovereignty. These are people from the worlds of Russian business, for example, media, politics. And among the institutions being targeted are the banks financing the Russian military. The EU says the measures will hurt Russia and will hurt a lot. However, there is doubt over that. Meanwhile, the UK has also introduced sanctions over the crisis in Ukraine. Like the EU, it's targeted Russian banks. 5 banks have had their assets frozen, as have a handful of Russian billionaires who've also been banned from travelling to the UK. Britain is also following the US in banning companies from doing business in the 2 breakaway regions of eastern Ukraine as well, although they probably don't do much business there anyway. So sanctions were threatened, and now we're seeing them taking effect. But Western leaders have also made quite clear that they still have further, much harsher sanctions at their disposal should they need them.
All right, and we see markets were easing today with those sanctions, but how are the markets reacting to the dramatic developments over Ukraine?
So we saw on Tuesday stocks in Europe temporarily nosedive on the clear deterioration of the situation in Ukraine. Markets have been calmed, though, by the announcement of sanctions. They're clearly being viewed as less aggressive than they could have been, and a positive move by Western governments to avoid a major conflict in Ukraine. But Germany's decision to halt the approval of Nord Stream 2 led to a massive leap in Europe's benchmark gas price, as you might expect. It rose by nearly 11%. That was an entirely predictable but unwelcome development, given that energy bills are already soaring for Europeans. We've also seen oil prices hitting their highest levels for 7 years, with Brent crude hitting $99.50 a barrel at its height. That's being put down to fears that Russia's oil exports could be disrupted. So once again, we can see the wide-ranging and global financial impact of the crisis over Russia and Ukraine.
Yeah, quite interesting. All right, Roberts, thank you so much for the update. Enjoy the rest of your day. Okay, now moving on, we see, let's bring in Juliana now. We see the Bank of England setting out some advice there to banks. Great to have you, Juliana. So the BOE is urging banks to show restraint on, paying out bumper bonuses. I guess it's still inflation concerns. Hello, Juliana. Juliana, can you hear me? Okay, it seems that Juliana can't hear me there. We'll try and get that. We'll try and get that sorted and get Juliana back on. Well, let's see what's happening in the U.S. See, U.S. stock market futures were modestly higher in early morning trade today. The S&P 500 closed in correction territory amid escalating tensions between Russia and Ukraine. Futures contracts tied to the Dow Jones Industrial Average advanced 0.54%. S&P 500 futures gained 0.64%, while NASDAQ 100 futures rose 0.90%. Well, our correspondent, Mary Bird, has details of yesterday's close.
The U.S. stock market fell sharply on Tuesday to start the shortened week after a holiday. It is clear that the tension between the U.S., Russia, and Ukraine is having an impact on many investors. The Dow Jones was down 1.4%, the S&P 500 down by 1%, and the NASDAQ fell by 1.2%. It is unclear whether or not the continued sanctions that President Biden is expected to put against Russia will have a dramatic impact on the stock market for the days and weeks to come.
All right, that was Mary Bird with yesterday's close in the U.S. Moving on to Asia Pacific now, we see stocks rose as investors continue to monitor intensifying crisis surrounding Ukraine. Mainland Chinese stocks closed higher, with Shanghai Composite gaining 0.93% to 3,489 points. At Shenzhen Components surging 1.90% to about 13,549 points. Hong Kong's Hang Seng Index advanced 0.6% as of its final hour of trading. We see South Korea's Kospi climbed 0.47%, closing at 2,719 points. Elsewhere, the S&P ASX 200 in Australia ended trading day 0.62% higher at 7,207 points. MSCI's broadest index of Asia-Pacific shares outside Japan traded 0.35% higher. And now let's take a look at what's happening in the energy market. We see oil prices took a breather today after surging to 7-year highs previous session as it became clear the first wave of U.S.-European sanctions on Russia for sending troops into eastern Ukraine would not disrupt oil supplies. At the same time, potential return of more Iranian crude to the market, with Tehran and world powers close to reviving nuclear agreement, also kept a lid on prices Today, Brent crude rose 30 cents to $97.14 a barrel, after soaring as high as $99.50 on Tuesday, the highest since September 2014. U.S. West Texas Intermediate crude also gained 30 cents to $92.21 a barrel after hitting $96 on Tuesday. See, prices jumped on Tuesday on worries that Western sanctions on Russia for sending troops into two breakaway regions in eastern Ukraine could hit energy supplies. But the United States made it clear there would be no impact on energy exports. All right, I think we have Juliana. I'm sure you couldn't hear me before, but I'm sure you can hear me now, Juliana. Great to have you. Well, I see BOE's Bailey is urging banks to show restraint on paying out bumper bonuses. I guess it's still, you know, inflation jitters right there.
Absolutely, it is, Laddie. Good afternoon. The Bank of England Governor Andrew Bailey, as well as some other senior figures at the Bank of England, are currently under questioning by the Parliament's Treasury Select Committee. The big theme of the discussion is around inflation and how that affects wages. And the governor has taken this time during earnings season to suggest that banks show some restraint when it comes to paying out big bonuses and dividends. I believe Barclays just paid out a dividend of over £1.9 billion. Similar kind of payouts have been seen by HSBC and others. He also spoke about wages as well. We know that the labour market is really robust in the UK at the moment. A lack of skilled workers, which is why there are so many vacancies available. And he's asking some companies not to give those double-digit pay rises, which a lot of people are asking for and deserve. And now that's come under some scrutiny because during the Q&A on the panel, he was asked how much he earned. He said he didn't know, and he was reminded that he earns over £575,000 every single year, and he definitely doesn't want not to receive his pay rise. But of course, it's all about inflation, currently running at 5.5%, likely to rise at 7.5%. And the Bank of England, it's their job to try and curb that back. So we're certainly expecting interest rate rises when they gather next month.
Yeah, I'll definitely want my pay rise. Well, talking about Barclays there, we see they posted, you know, quite an incredible annual profits there. How are analysts reading this?
Yeah, pretty good. Barclays are doing really well. Again, it's earnings seasons. Their profit for 2021 has more than doubled what they received in 2020. I believe they had profits then of about £3.8 billion. It's shot up to over £8 billion. Like all of the other banks, they are benefiting from releasing some of the money they put aside, the provisions they put aside for bad loans, bad debt. They were giving out so much money. Many banks thought they wouldn't receive it back, but they have been doing so well. Barclays in particular, they've cited really good investments in their investment division. So yes, they are one of the top risers on the FTSE because they've outperformed last year.
Quite interesting. Talking about top risers now, I saw there was some relief in the markets earlier. How's it looking now?
Yeah, there has been some release. We saw the price of oil shoot up to nearly $100 a barrel of Brent crude. It subsided today, and it seems as if the market jitters that we experienced yesterday have waned slightly. I think even though some of these sanctions have been described as very tepid, it does appear to, at least for now, have eased anxiety amongst investors. The FTSE All-Share is up 0.46% at intraday. The FTSE 100 is up by 0.51%, and the FTSE 250 is up by 0.42%. In the currencies market, the British pound is up against the US dollar by 0.14%, down on the euro by 0.04%, and up on the Japanese yen by 0.17%, Laddie.
All right, let's hope this uptrend continues. Juliana, always great to talk to you. Thanks for the update.
Thank you.
All right, so after the break, we'll look at challenges and prospects for Africa's labor market. That's in a moment. Just stay with us. Welcome back to watching Business Incorporated. Now to our next conversation. Well, the lack of jobs and underemployment, where jobs exist, are significant concerns across the African continent. 14% of the world's population lives in sub-Saharan Africa, yet the total combined annual economic output of sub-Saharan Africa, as measured by the World Bank development indicators, just $1.8 trillion, roughly the same as Italy, which has just 60 million inhabitants. Well, to discuss issues in Africa's labor market, we have Professor Mthunzi Mdwaba, candidate for the International Labour Organization Director General post. Great to have you on the program.
Thank you very much. Good afternoon. Thank you for having me on the program as well.
Great to have you. Well, there have been migrant and labor issues concerning, African workers recently. One was with Nigerian immigrants not getting their work permits renewed in the UAE. How did you see the turn of events there?
Well, the challenge with migration and the challenge really with the demographic challenges that we have throughout the continent is purely because ultimately, as Africans, I think we need to work together and be collaborative. I think that's one of the things that, the COVID has taught everybody, that if we don't collaborate and work together in the continent and work together globally, we're always going to have these kind of challenges. I think ultimately we need to understand that as long as we cannot deal with poverty issues, as long as we cannot deal with hunger issues, there's always going to be cross-border operations and people going over the border illegally most of the time, because even the regularization of it to make it legal is a challenge because of the floods, the big numbers that come across. So ultimately what we do need to do is to find a way in which nationally, as members of the ILO, all the countries, 187 of them in Africa, has all the countries being members of the ILO, we need to find a way to work together, ensure that our policies are all pro-employment, because if our policies are pro-employment, but we implement, more importantly, which is really what the failure has been, then we shall be able to curb these challenges. But until we do that, we're always going to have these challenges, unfortunately.
All right, I know you're, vying for that DG position there, but what would you say are the key challenges facing the ILO?
Well, the key challenges facing the ILO, for starters, is the fact that not many people know it. I doubt that you ever heard of it until today, because I was coming on TV. So you had to quickly do some kind of research and see what the ILO does.
But I knew about the ILO.
And so we need to have some kind of humility that recognizes that we're not known. And if we're not known, we need to make sure that as an organization that is the mother of the workplace, because every kind of law that you can think about from a labor point of view comes from the ILO, whether it's how many hours we work, whether it's issues of occupational safety and health, whether it's issues of freedom of association, which is Convention 87 of the ILO, whether it's issues that relate to minimum wage dispensations, Convention 131. All the countries of the world are members of the ILO. They are supposed to go home and actually take that, ratify it, include it in their laws. And the biggest challenge of the ILO is implementation, is that it's well, good and done that we talk about having these conventions and we talk about this ratification, but more often than not, people take photographs with the DG, and I suppose I would also have to be one of the most photographed people, but for me, that's not important. What is important is that when we go home, we go and we pass this into legislation and then monitor the implementation that we've done so that we are felt on the ground by the people whose lives we are supposed to impact. So until such time that we can be known for heightened implementation as opposed to just heightened ratification, the ILO is always going to have problems in being able to assert itself and demonstrating its relevance to all and sundry in the world.
Quite interesting. But another, interesting economy that's building is the gig economy is catching on globally. How do you see it impacting, Africa's labor market, or do we even have any gig economy here?
Well, I'm always fascinated when I'm asked about gig economy, because actually the word gig actually came from having a gig. When you have a gig, that's gig economy. But these days, people don't have jobs that are taking forever. They have gigs, that last for a day, that last for a few hours. And our young people these days actually love having gigs because they can go do yoga, they can go do other things during the week. But the reality of it is that it will impact Africa as it impacts the whole world. We are having a huge challenge with how digital platforms are supposed to be managed, because in themselves, why digitization is actually in the long term going to increase jobs. But until such time that we find a linkage, or rather a balance between what happens on the digital platforms and what happens with how we ensure that we have job-intensive creation of work, and we also make sure that those jobs are sustainable, we also are not going to win. So we need policies that are very adaptable, that understand that the future of work that we keep talking about has already happened. We can't talk about the future of work and the gig economy and the digital platforms as if it's something that's still coming, something that we still need to plan for, because it's been with us for a while.
Right. All right, Professor Mthunzi Mdwaba, thank you so much for coming on the program. I do wish you luck with your upcoming position.
Thank you. Thank you, sir. Thank you so much.
All right, thank you so much. Okay, so moving on now to, we see Eskom Holdings, South Africa's indebted power utility, is considering selling distribution assets as prospects of the government taking over about half of its 392 billion rand obligations seem to be dimming right now. State-owned Eskom, which supplies almost all of South Africa's power, said that it needs to cut its borrowings to about 200 billion rand to be sustainable. And the idea of the government taking a chunk of the debt has been discussed for several years, while the National Treasury may authorize the transfer of some of the debt to sovereign balance sheet. Eskom wants to go ahead with a proposal to sell distribution assets, especially in major cities such as Johannesburg and other municipalities. And now Egypt and Russia in talks to sign a memorandum of understanding to promote natural gas as a fuel in the transportation sector, and also to enhance cooperation between both countries in this regard. According to a statement by Egypt's Ministry of Petroleum and Mineral Resources, two sides discussed cooperation in the field of converting cars to run on natural gas and the possibility of exchanging experiences in the field through scientific and technical cooperation, capacity building, and technology transfer. The Russian minister affirmed his support for Egypt in hosting COP27. He also expressed his country's interest in the East Mediterranean Gas Forum and its desire to hold subsequent meetings to discuss the forum's development and how to coordinate cooperation between the gas exporting countries. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye-bye.